This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, December 31st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn down a half at 440 even. January soybeans are down 3 1/4 at 1043, and March Chicago wheat was down 1 3/4 at 509. We got a weekly export sales report here this morning. This brings us up to catches us up through December 18th. So with this, we'll have 2 more export sales reports, and then we'll be caught up. For corn, it was solid, 2,202,300. That was above the top end of the range. Disappointing on the soybean side, 987,100. Low end of the range was looking for 1.4 million. On the wheat side, also towards the lower end of the range, 147,800. Meal on the same along the same lines, 299,100 for the meal. But a real solid week for the oil complex, 49,200. Dustin, we were talking before the show. Today is first notice day for January futures, as we've got the last trading day of the year. Also announced overnight, the CME increased silver margins once again, which has contributed. Silver's down almost 7.5% here this morning. So we're still whipsawing quite a bit in those markets. So with that, Dustin, maybe share a few thoughts here as we wrap up the year, and then we'll throw around the room.
Yeah, Dan, it looks like there were a number of issues last night for the January 26 soybean futures. 1,062 contracts, all of them stopped variously, multiple different firms. So it makes sense. Jan March kind of breaking yesterday in beans. There was heavy deliveries. So, going forward, I think just looking at those export numbers again, kind of poor on the bean side, really strong on the corn side. Makes sense, with the market action we've had. It is opposite, like we've been mentioning, of what the funds have been building. I think it'll be interesting to see the catch up here on the COT data to see if the funds are still going to be long beans and more short corn. Just from a balance sheet perspective, I think that's what I would expect, where the tightness could end up at the end of the year. So we've had a lot of bean movement because of the need to raise cash, and you can raise cash so much quicker. That's typical, right? The percent sold that the USDA will record through the year is usually much higher for beans by this time of year than it is for corn, over a 20-year period especially. So, but this would be the year I would expect that to be the case. Basis along the river has not been that terrible, actually. For January delivery, decent basis still. A lot of those locations in Zone 6, which is a sign that we have good river demand. In China, we have seen that steady pace of Chinese purchases. So we'll see. I think the market is definitely, fairly priced coming into this time frame. I just think that the opportunity there for beans to be a little underpriced is what I'd perceive.
Very good. Brian, we were talking before the show. So, we're going to wrap up the year here today. Slow markets, not a whole lot of fresh news, but maybe impart us on some wisdom here as we head into the new year.
Yeah. Before that, though, I just wanted to play devil's advocate, with the strong corn demand, Dustin, and a couple of unknown corn sales. Usually everyone's minds go to China. I mean, no one expected them in 2020 to be purchasing U.S. corn. Not saying any of this would be happening, but would that completely change the whole narrative, you would think, on corn if that does come to fruition?
Well, yeah. If China were to start buying corn, I mean, we have the record corn demand right now without China, right? It's South Korea, Mexico, Japan. I mean, just corn demand everywhere. And I think leading up to this for like the last year, we talked a lot about like world corn stocks to use ex China, because China's numbers show them holding. I mean, after 2018, they showed them holding another 100 million metric tons more than anyone expected when they did their census, right? So like, what is the real number? We have no idea. We can't really count on their data being good. If they were to start buying even a little bit of corn, it would be extremely bullish, because it's just the demand source the market's not accounting for right now. I don't think they will. I mean, I think that they, traditionally they have not imported a lot of corn before 2020. And that was a special circumstance because they had negotiated phase one trade deal, which is $50 billion of U.S. ag products, which is like, it's like $1 billion, right? So it would have been so hard to get to. We just didn't have anything close to that in the past, and they were buying everything they could to try to get to that number. It did appear they made an honest attempt to try to get to that number in 2020 and going into 2021. And that's partly what sent our markets, skyrocketing. There is no Chinese corn deal. There's no Chinese minimum purchase agreement right now. There is a bland, kind of above average, decently averaged quantity of soybean imports, but nothing on a dollar figure. So like this type of trade deal is much different, in my opinion, than the last time. And it's not like there's so many other issues that still need to be worked out with the trade war. Besides this is just an appeasement, I think, on both sides.
Gotcha.
All right, so give us that.
Oh, you were right. Are you guys ready for it?
We're ready.
What is the worst part of jogging on New Year's Eve?
All of it.
Yeah, who would do
The ice
that?
falling out of your drink. Happy New Year.
That's what we got. That was the whole suspense. Very good, Bri. I hope you're not jogging anywhere. We need you. We can't lose you, buddy.
No.
Ryland, pretty quiet in cattle. Same old song and dance here. Little better market for hogs. So anything changing on your front here as we go into the new year?
Yeah, everybody's waiting for cash to wrap up. I think you got kind of a mixed bag of how this thing's going to turn out, but asking prices were like 232, so it kind of feels like we're going to see, just under there, possibly, around steady-ish. So maybe a mixed bag, but overall, just seems like the market's been completely sideways. We're chopping in this range. There was some headlines out this morning that China was going to add a 55% tariff on beef imports. So they're into their country. So it's going to directly affect some of the bigger players, obviously Brazil, Australia. So they're trying to, looks like, kind of restrict some of the flow of meat into their borders. And that's going to go into effect January 1st and apparently last for 3 years. So it just kind of seems like the quotas are kind of already what they've been importing. So I don't think this really moves the needle, but the headline shock may cause a little bit of fear on the open. But overall, it seems kind of like a nothing burger, or doesn't really change all that much in the grand scheme of things. So something to keep an eye on. But feeders, obviously the star of the show, new highs for the move, filled the first gap. Next gap is up near contract highs. So I think that's something that everybody's going to hopefully see in the new year. So we'll see if we can ring that in. And then on the hog side, yeah, it's still, big bump in open interest. Looks like managed money's coming back, even with, kind of lower carcass market, down $1.83 yesterday. Belly's down $5. You got cash poking back above the $70 level. A little bit of optimism, I think, overall, just kind of going forward, that demand's going to stay relatively firm here. We're kind of through this little bit of a December glut of production. So things still anticipated on remaining pretty firm, but overall just kind of dropping back a little bit. So I think just, close back over the 100-day moving average. We'll see if we can get a little bit of a technical breakout. Otherwise, maybe we see a little bit of profit taking ahead of the new year. But generally speaking, the trajectory in hogs is pretty firm. So we shall see.
We did it. We made it.
We did it.
Final show of the year. It's what a great year, guys. Interesting year. This was a battled year, Squirrel. We've talked about it quite a bit. This was it was tight margins. It was difficult. It wasn't fun for majority of the year with everything that was going on. But we made it through, and we'll keep plugging along. We've got, I think, another interesting one on tap for next year. I mean, there's a lot of stuff that is going to play out. We've got certainly an ever-evolving crop insurance decision that's going to be coming up with new subsidies, and we're going to see the new products that are coming out. So a lot to look forward to here. We're going to have to grind it out again in our industry, it feels like. But certainly appreciative to our clients, our followers, everybody that tunes in on a daily basis. We're gonna keep going here and keep bringing the show to you. After the first here next week, when we come back, we've got a couple of really exciting announcements that we're all really anticipating and looking forward to. So be sure to tune in on Monday the 5th. We will be launching something really special that we're excited to talk about. So yes, that's a teaser, and that's really as far as I'll go with that. Also, looking at the schedule, we've got a full market here today, so we'll close at 1:20 Central. No markets tomorrow, so everybody have a good time tonight. Be safe. Don't have to worry about anything tomorrow, and then we'll have a hard open at 8:30 Central here on Friday. Jack will be in to host the first show of the year. I felt it was only fitting that he kicks off the year. So who knows what you got there? You got that. You got good Fun Fact Friday, Brian's edition. So hopefully he's recovered by Friday morning. No promises, right, Brian?
Right.
So we'll be back. On Friday morning. Jack will be in, and we'll kick off the new year. So again, thanks to everybody that supports the show and our clients and our followers. We certainly appreciate it. We couldn't do it without you. We hope everybody has a safe and healthy new year. Shameless plug, if you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. That's a wrap. We're done for the year. Hope everybody has a very happy and safe new year, and we'll see you again on Friday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.